While more clarity has been made on Basel III capital requirements, much still has to be decided on the liquidity front. To help me discuss the impact of European regulation and supervision on the banking sector, I'm joined by Philip Alexander, who is the editor of Global Risk Regulator, a magazine that the bank has recently acquired. Hi, Philip. Thanks for joining me.
Good morning, Sylvia.
So, how big an issue is liquidity uncertainty at the moment? So, liquidity ratio uncertainty.
I think there's two elements to it. The first is obviously we don't know the final shape of all the liquidity regulations. The Basel Committee has put out what it considers to be a final liquidity coverage ratio, but individual countries and the European Union in particular will still have to put that into law, into the regulations in their own jurisdiction. And in addition to that, they're still consulting on what's called the net stable funding ratio, the thing that's meant to ensure that where banks have long-term assets, they balance that with long-term funding. That's still going through a process of drafting, and that's the one that may also pose a lot of, well, both of them together pose problems for banks. It's a very new area. There wasn't much liquidity regulation at all before the crisis.
What kind of time frame are we looking at?
Well, with the liquidity coverage ratio, the main activity is in the US. They've already published a first draft of the regulation. The major US regulators, so the Federal Reserve, the Office of the Comptroller of the Currency. There's been a lot of response from the banks on that, a lot of it quite negative. So that's going to obviously go through a process of further drafting and a lot of back and forth between the banks and the regulators. The European Union is due to publish the secondary legislation that will enable liquidity coverage ratio in June this year. But there does still seem to be some debate going on amongst the different European regulators over how far they want to make sure banks secure their own liquidity. So in a sort of crisis situation, they have enough liquid assets to be able to cope for at least 30 days. Or how far central banks should always be there ready to step in as a backstop. And there's very much a view, if you like, the sort of Germanic view of the Deutsche Bundesbank and also the Austrians is banks really need to ensure their own liquidity, self-insurance, versus the view elsewhere, perhaps some of peripheral Europe and France, where the central bank is viewed as an integral part of the financial system. Okay. So that debate has got to play out while they're drafting the legislation.
There's a typically European debate, and again,
exactly.
Obviously, and again, focusing still on Europe. Obviously, all these rules are being developed to make sure that the banking system in Europe is strong and solid and is going to withstand any major shocks, which is also why we are going to see a new stress testing exercise later on this year. How hopeful are you that actually this time it will be more meaningful than the previous one we had, where, for example, in the case of Dexia, the French Dutch bank, Belgian bank, which passed with flying colours that first test in 2011 and had only a few months after the test had to go back to the government and ask for more money. So how hopeful are you this time things will be different?
Well, there's several things that have changed. What hasn't changed is the actual capital level that's required. Banks still need to meet the same target, which is basically to meet the Basel III targets. What's changing is, first of all, who's conducting the stress test. So the European Banking Authority, again, is dealing with it across the EU, but you've also got this new player in it, which is the European Central Bank, that's now taken over single supervision for the banks that are in the Eurozone, which were the banks that were causing the main concern last time, because of course it was, 2011 was the first stress test at the height of the Eurozone crisis. So there was this concern that the European authorities were going a bit soft on the banks because they were worried about the crisis. So the European Central Bank's taken charge. This is all ahead of them becoming the official single supervisor in November 2014. So there's an issue of their credibility. This is their first act as supervisor. They don't want to get it wrong. And one of the specific methods they've gone about to really prove that this is solid is that in addition to the stress test, and actually before it, they're carrying out what they call the asset quality review. So the problem last time was, if the banks are being too optimistic about the state of their assets today, then whatever stress test you apply is still going to be wrong. The idea is they're going to look at all the banks' balance sheets as they stand at the end of 2013, and they're going to give their own view on whether they feel the asset quality is what the banks say it is. So if they've got things like, defaulted real estate loans, and they're still marking the real estate at a very high value, and perhaps it's fallen in price like banks in Spain, you might expect, they're going to be very strict on that and mark it down. So in theory, that's going to create a proper set of statistics on which they'll then be building the stress test, so the stress test will be more realistic.
So yeah, I'm more hopeful.
That's the hope. And I mean, there are other levers they've got as well, which is the sort of some of the loss assumptions that they can build into the stress test could be more strict. So even though the point that everyone's got to reach is the same, they can make it a lot tougher in terms of the scenarios compared to last time. And clearly, you know, it is one supervisor in theory, that the ECB coordinating all the Eurozone, so there's less risk in theory of individual countries going a bit soft on their banks.
Okay, so it's going to be a very interesting 2014 for the whole of the European banking sector, and we shall hope that all these rules and tests will make it safer soon. Thank you.
Thank you.